Alright guys, let's get started. Welcome in. Happy Sunday. Today is the first Sunday that we're doing this, right? In 2024, January 7th. We're gonna go over a couple of news. The calendar that I use for news, it's called Forex Factory. If you're not familiar with it, I'm gonna post a link inside the chat right now so you guys can get a little bit more familiar with it. We're gonna talk about the week of January 7th, which is starting today, right? Agent session is live. We do have a couple red folder news. We have CPI data that's coming this week. We're gonna talk about that right now. So if you want to follow along with me, just post it into the chat. That is Forex Factory calendar. And we're gonna get started for today, right? Sunday. Sunday is a bank holiday for the JPY, so we're not gonna see too much movement in the Asian session. We never really do see too much movement anyways, right? Asian sessions usually accumulation for us. Monday, we do have red folder news for CHF. Tuesday, we do have red folder news. We have one that's going to be for the Aussie dollar. Wednesday, we do have red folder news for the British pound. Thursday, that's when we have the CPI data for the USD. That's going to be extremely volatile for us. Also, CNY, Chinese yen, it's going to be on Thursday as well. If you trade your exotics, be very careful with that. And then the entire market, if you're trading anything, be very careful with the CPI data for USD. Friday, we have another red folder for the British pound. And then we also have a red folder for the USD. We're talking about PPI right there, core PPI. Now, without further ado, let's jump on the charts. Right, hopefully you guys can see my charts perfectly fine. We are going to talk about NAS, right? So right now we are on a nice, beautiful retracement from hitting the all-time highs. If you're looking at my chart right now, you're going to see that we did reject off this top over here. Let me take out these fibs so you don't get too confused. Broke through this all-time high, right? The weekly liquidity, December 2021. Broke through that, created an all-time high up here. We're gonna mark that out. And we're gonna label it new all-time high. Talking about 17,165. The chart that I'm looking at right now is going to be the NASDAQ futures chart. This is gonna be the most accurate chart when it comes to NASDAQ, as this is gonna reflect the majority of the liquidity in NAS. Now you will have other broker charts, right? If you're trading Forex, if you're trading NASDAQ's indices, metals, Forex on a Forex broker, you're going to have your own proper broker for those charts. But to get the most accurate data, I like to look at the NASDAQ on the futures charts. So as you can see here, we hit an all-time high, and then that was followed by a market structure shift to the downside, right? So this is on the daily chart. We do have over here a nice, beautiful imbalance left over after this massive displacement to the downside. So this is a fair value gap, right? We're going to identify this fair value gap here. Give me 1 second. Let me mute DTR. Okay. Guys, please make sure you have your mics muted because it gets activated and then I can't hear myself. So we have this fair value gap over here on the daily. We're going to label that, and then we're also going to mark the 50% line of it, right? Now, when it comes to your strategy, do whatever your strategy says. If it's profitable, great. If you do not have a strategy, look inside our users' strategy, inside our forums, inside our Discord. And for those on YouTube that are watching this, in order to get access to the Discord, you'll have to get EZAlgo Pro. And then that comes with the indicators, live sessions, 2 different signal providers for Forex, and a lot of education. Now, guys, in the Discord, I'm going to be posting what looks like entry models, right? So these are 8 different entry models that you can do on a lower time frame. So whenever we identify points of interest, which is what we're going to be doing here in this live, we're going to identify all these points of interest on the higher time frames. And then on the lower time frames, we're talking about 5-minute, 15-minute time frame. We're going to look at these entry models, and that's how we're going to be entering into these points of interest, right? So we have this one over here. We're going to color this red because we're looking for shorts. Right now we are bearish right? We just broke through this daily fair value gap and the 50% line, so I'm going to remove this completely. This has been mitigated. And then I want you guys to pay attention to this one over here, right? So this daily fair value gap 50% line was hit and completely rejected, wicked into it, wicked up, continuation to the upside, right? We have a fair value gap here, but this is very tiny in comparison to this one. Also, when I'm looking at fair value gaps and I'm looking for retracements after a market structure shift, I like to draw my OTE lines, my optimal trade entry lines, right? These are my FIBs. If you want to get a little bit of the actual settings themselves, this is what I use, right? 1 is going to be the starting line, 0, that's the end line. And then negative is 0.27, that's going to be your take profit. Your entry points are going to be your DCA entries, which are 0.62, 0.705, and 0.79. Those are usually the entries that you want to enter on. So how you do this, right? You draw these fibs. Fibonacci is just basic math, right? Well, actually, no, not basic. It's extremely complex, right? I still don't understand how it works. But math is math, and math works in the market for some reason. We draw these points from the start to the retracement, and then it will let you know the optimal trade entry, which is going to be those 3 different lines right there. Now, if you have a confluence, such as an order block, a PD array, right? Like a fair value gap, right? Something like that, overlapping those lines, then that gives you an additional confluence to be confident in that trade. And then that's going to be a proper trade for you, right? So we're going to do that here. We're going to draw it from the start point, which is this top, and then we're going to go to the retracement because now it just did a market structure shift. And we're looking for an entry, right? Because we have an FEG into the displacement. Draw it to the point of the wick. And you're going to see right here, the 50% line of the fair value gap, and then the ending of the fair value gap, right? The 0.705. Those two overlap inside this fair value gap. That gives me that confidence like, hey, we're going to have enough movement to come back into this area, retest, and then this is where we should be getting in, followed by a lower time frame confirmation that, hey, we're going back to the downside. So this line right over here, right, we're looking at the daily on the 50% mark. This line here is going to be our point of interest as an entry. It is 16,837.50. Mark this line out, set your alerts, and then also set an alert over here at the 0.705 line. We set an alert there, and we're going to be looking for bearish positions, right? We are in extreme premium right now, and we're looking at a downtrend. So let's focus on those right there for a nice high quality trade. We do have this fair value gap over here. Let's not ignore it, right? Because we are on the daily. We should be expecting some kind of reaction to that on the lower time frames. For the scalpers out there, this is going to be a nice point of interest for you. But the fair value gap that's on the top, that's the one that we want to focus in on. This one over here, we're going to mark this fair value gap for you at the 50% mark. That coordinate is 16,607. Set your alerts on that. That's going to be a nice little fair value gap to see what exactly happens there. Now, we do have CPI data this week, so I'm expecting this to just blast through that and then go into this bigger fair value gap for the daily. But we'll see how the market works out for us. Let's go down to the 4-hour time frame to see what other confluences we can see over here. We're looking left. Left is looking good. So we do see the 4-hour overlaps with the daily over here for the fair value gap, which means this area here, it's still very high quality for me. So we're going to label this, right, daily and 4-hour fair value gap as an overlap. Give me 1 second, I just had to mute Kiwi. So you have the daily and the 4-hour fair value gap 50% mark. We're going to put that as an overlap. So those are two different confluences that we have on a higher time frame. Let's see what we look like on the 1 hour. Right here, this is in the 4-hour. There's no fair value gap, but there is a fair value gap in the daily. So I'm just going to remove that because there's no confluence in the 4-hour for me. This is still high quality for me. And then we have another fair value gap over here on the 4 hour. That one overlaps with the 0.79, right? So like I said, Fibonacci, don't know how to explain it, but it works, right? And there's going to be confluence on there. This makes for a nice high quality trade as well. Let's set an alert there as well, because we do have that confluence in the 4 hour. Good thing about it is, since on the daily, it doesn't go all the way up there, and then that's in the 0.79, could wick into there on the lower time frame, like 1 hour, 4 hour. On the daily, reject completely, and then continuation to the downside. So we are still bearish when it comes to our positions. Let's go down to the 1 hour to see what other additional confluences we have. And yeah, basically we have two different 1 hour confluences within inside the 4 hour and daily fair value gap. So you have one part here, and remember the OT, the optimal trade entries, 0.705 right here, perfectly in the center. So this makes me really confident that this is going to reject off here. And then also 0.79 right in between two different fair value gaps. That makes me really confident. So all three of these are pretty good entries. I would say focus on the last two versus the first one, because it looks like these two are going to get tapped in, and these are going to give you a bigger risk to reward, right? And like I said, like when it comes to the strategies, if you don't have one that works for you, check out the user strategies. We have it here in the Discord for you. And yeah, basically we're just identifying points of interest. We're just trying to keep it as simple as possible. We're bearish right now. We're looking for bearish positions. These are the points of interest in which something's going to happen, and the probability of it happening in our favor is a lot higher than pretty much YOLOing anywhere else, right? So we just identify daily values, 4 hour values, and also the 1 hour. Does anybody have any questions for me in regards to NASDAQ? Let me get 3 thumbs up inside the chat, and then we'll move on from NASDAQ to US 30 for you guys. I got 1 thumbs up. Let me get 3 thumbs up. We'll move on to US 30. That's 2. Let me get 1 more to make sure you guys are paying attention. And then we'll move on to US 30. After US 30, we'll move to metals. After metals, we'll move it straight into Forex. 3 thumbs up. We are moving on to US 30. Let's go. US 30 on the daily. What are we looking at right here? We are still in a bullish momentum, right? It's crazy. US 30 is bullish while NASDAQ is already dumping. Don't get confused though. We are hitting all-time highs as well with US 30, so we're expecting it to dump anytime, anytime soon, right? Any moment soon. So right here, we need to close and break above this on the daily chart. We need to close above that, a full candle, a body of a candle, not a wick. Close above it, continuation up. If we do not, and we close below this line, we're looking at a market structure shift to the downside. But let's identify this area here, right? So this is a bullish fair value gap 50% mark. Coordinates for this are, for you guys, 36834.08. Excuse me. We're looking for continuation of bullish momentum. Now remember my OTEs, right? My optimal trade entries. We draw from the start of the movement to the pullback. Let's see what this tells us. The pullback. Crazy, right? Math just works out when it comes to these formulas. Look at this fair value gap overlapping with this fair value gap, the 0.62, overlapping with this fair value gap, and then overlapping with this fair value gap. So looks like we might be able to tap into all of these, and then continuation to the upside. Now if it breaks through the 1 line, that just confirms to us that this is going to turn bearish for us. What's crazy about this as well is that if it breaks through, it's going to collect liquidity here. This is a weekly and a daily, so this is extremely strong. when it comes to a point of interest. So this is going to overpower any daily fair value gap. This is just going to wick it up. Massive amount of volume, massive amount of volatility. So we might see something like this occur in the charts, right? We might see it probably accumulate, dump, hit here, break through, destroy this exterior liquidity, and then dump into that. But it's got to take this liquidity here so it has enough momentum and volatility to go down, and then starts destroying all these fair value gaps on the way. But the fact that this is a weekly and a daily fair value gap, oof, that's going to have massive amount of volume and strength behind it. So points of interest, this massive fair value gap here on the daily, we're going to identify that, and we're going to set alerts to that. We're going to set alert, and we're going to mark this. This is daily fair value gap 50% mark. Then we have these two here as well. We're going to mark these out because they overlap with it within our OTE. These are going to be in some nice place for us. You might even be able to just ping pong off them, catch the longs, catch the shorts, and scalp those out. Alt H. Coordinates for this one are 36491.89. Coordinates for this one are 36341.37. Right, we're going to mark these out, label them as daily fair value gap 50%. And then we're going to watch it play out. Right now we are looking for shorts into those areas. So this somehow has to come down into here to tap into this liquidity, or one of these three fair value gaps. Let's see for confluences on the 4 hour. 4 hour, we have bearish momentum already. 4 hour, we do see a market structure shift over here, right? Market structure shift. This is a massive bearish candle. Jesus Christ. We have a market structure shift here with also a breaker structure, which is a continuation. Tapped into these two different fair value gaps with this one wick. This one's already tapped into this fair value gap. All these fair value gaps are tapped into and mitigated. This one as well. Continuation to the downside is confirmed. There's nothing else we have up here to look to. And there's nothing that I'm confident into telling you like, hey, this is a good entry point, because it's not very clear on the charts. Let's go down to the 1 hour to see what's up. This fair value gap here has been mitigated. So we're just waiting right now to see the next movement, which is going to be a market structure shift to the downside. We just made a lower low here. Continuation bearish, but it can do anything at this point, right? So like I said, I'm not confident in an entry point for a short yet. We just have to wait it out, because this might actually pump the upside, break through these two different structures. 1, 2, maybe in this one to this one. Equal highs here. Breaks that, collects liquidity, and then dumps. We just have to wait this one out. There's no clear indication here on the 1 hour or the 4 hour. Now, does anybody have any questions for me when it comes to US 30? We are still bullish on the higher time frames, even though this says bearish. And then you see here on the EZAlgo trend indicator, it's also saying bearish. We're still bullish on the higher time frames. We're still bullish on daily. We haven't broken through this on the downside. We're still bullish on the weekly. You guys have any questions for me on US 30? If you do not, let me get 3 thumbs up, and then we'll move on to gold. That's 1, 2, 3. Let's go on to gold. All right, let me clean up these charts a little bit. I did take a really nice trade right here. Right, so I use the fibs a lot. They're my jam. God, fibs are amazing. All right, so what do we see here? We see some bearish momentum. We see rejection off this part. Massive wick, equal highs pretty much, right? And then over here on the daily, we are in a bearish trend. Took out this buy side liquidity. This has been mitigated. I just removed it. We have not made a market structure shift yet on the daily, but you will see on the 4 hour, we do have a market structure shift right over here, and it worked out perfectly. So for the daily, what do we see? We see a fair value gap that was tapped into. I took an entry in there. There is nothing else here on the daily besides on the 4 hour confirming that we're in a downtrend. Now, we still have this daily fair value gap 50% mark to tap into. So somehow here we're gonna get a confirmation for a short. Let's ride that down. And then the plan is to bounce off here on the daily fair value gap and continuation to the upside. So somehow, where are you, my brush? There you are. Somehow this is going to dump here, shoot up, dump, and then shoot up. It's going to be pretty volatile. So we're going to be looking for shorts on 4 hour, 1 hour. Now that this daily fair value gap has been mitigated, with the direction to go into this daily fair value gap with this beautiful order block over here, that's also holding it down. Let me remove that because that's been mitigated. Yeah, this order block's holding it down for him. So you got double confluence right there. Let's look at the 4 hour. 4 hour, you do have a market structure shift. We are moving in a bearish momentum. Bearish momentum is confirmed by this lower highs, lower lows, right? Closing underneath these structures. And it's working its way down to that daily fair value gap. Do I have anything else here as a point of interest? The only thing I have as a point of interest is going to be this buy side liquidity here, overlapping this order block, right? So pay attention to this. If it breaks through that, then we are officially back to being bullish. We're going to highlight that. Color it white. Coordinates for that is 2078.92. We can round up. We can do 2079. Breaks through that, closes on a daily or a 4 hour candle. That means we're just going to continue to the upside. All right. Let's draw the OTE. The fibs. Let's see what my fibs tell me. You guys are going to learn to love fibs as much as I do, because look how crazy this is. So this is my start point. This is my retracement, right? This is how I got into the trade. When I did my trade, I put my entry point at the 0.62. I got tapped into it, and then I exited around here. I was expecting it to go all the way down to the 0.27, and it actually will, because we have to tap into this daily fair value gap 50% mark. But I was just being a little bit fearful because we're going into the weekend. So this was a trade that I did on Friday. Pulled out here, made out with some good profit off that, and I'm just chilling. Now there is some news that's going to come up this week, so more likely than not, it should probably be tapping into these other 2 points now that the 0.62 was mitigated in that one incredible wick. Incredible, incredible. Right, so let's go down into the 4 hour. Let's see how the confluences look like on the 4 hour. Yeah, it's not much. But yeah, this was such a beautiful trade on Friday. Jesus Christ. Tapped into that. And yep, it needs to come down. It needs to die and go into the daily fair value gap. Let's look at the 1 hour. 1 hour. Yep, looks beautiful. Look how crazy these fibs are, right? So if you see here, there's a structure here. See here, there's a structure here. You see here, there's a structure here. It's not just some random spots. Like these are very like high quality spots for the trades. That's the power of the fibs. Remember, draw the fibs from whenever you see a massive displacement that leaves an imbalance behind, such as a fair value gap, aka fair value gap. Draw that. Draw market structure shift, displacement, all the way to the retracement, and then you're going to see your OTE for entry points for you. So for gold, not much going on. A little bit of accumulation right now. We're waiting for it to go down. Entry points that were identified are this one over here. Daily fair value gap 50% at 2010. We're looking for longs there. We're looking for bullish positions there. And as of now, we're looking for anything in the 4-hour or 1 hour as entry models for the short going into that daily fair value gap. There's no confirmation of anything here in this area. Everything else has been mitigated. So watch that carefully. Now, does anybody have any questions for me on gold? All right, let me get three them. OTA entry and fib is amazing to you. Yeah, dude, it's super underrated, and it's incredible. It's incredible like how efficient it is, especially on the higher time frames. Because as you're going down in the time frames, you're seeing a lot more confluences like market structures. You're seeing like fair value gaps overlapping, and you're seeing like support and resistance levels at those OTE levels. It's incredible. Shabab, can you tell them 5 minutes for gold? Shabab, so 5 minutes and 15 minutes are going to be for a lower time frame. Those are our entry models. So you can be a little bit more specific, because if we go down into the 5 minutes, we're looking for an entry, but we haven't identified a point of interest yet. There hasn't been anything on a higher time frame for us to be like, oh, okay, cool, let's try to get in there now. So if we go down into 5 minutes, look at this. It's just accumulation. You don't see anything. It's doo-doo. Right? It's just noise. What you're trying to do, right? And let me show you. What you're trying to do is we're trying to identify, which is the point of this. We're trying to identify fair value gaps, points of interest. And then using those points of interest, then we go down into like a lower time frame. So for example, this. You see something like this, we identify that, hey, we want to go down here at the 50% mark. And then once it gets in the 50% mark, we're going to do a low entry. Right? So for example, let's go through this together. Where are you at? That was November 16. It's kind of annoying that I have to scroll like this. November 16. Right, so we wanted to get into this here, and we identified on the higher time frame. Or was it here? It was here. And then basically what you do is we're identifying it on the higher time frame. We identified that was a higher time frame fair value gap, and we wanted to get in there at the halfway point, right? So kind of like, this is kind of like the strategy that I do. Like I said, you can use whatever strategy you're comfortable with. I'm not telling you to do this, but this is a little bit easier to read when it comes to the price action, because of the fact that this, look at these candles, right before this move. What should this tell you? That this is just unnatural, right? This is a huge anomaly. Like, this shouldn't happen. When you have candles that are this size, that are pretty much more or less the same size, a little bit of variation in between them, but they're all pretty much consistent, then you have this massive displacement. That's a massive amount of volume that's behind that. What that tells you is that it has to somehow come back and retest this area, because it has not been retested here in this candle or here in this candle. So the only way for this to continue being what it is, and this entire thing being what it is, the whole price action is somehow someone, some institution, some bank, somebody, some whale has to come back, reload their bags and continue up, because that's the whole plan of this. The whole plan of these massive displacements is to drive money into the market, tap into some liquidity, scare people out, get their liquidity, come back into it, and then continue up. So we're gonna go to the right, right? So then it finally comes back down. And this is what we use for the 5 minute. And it's crazy. Look at this. It goes back down kind of like with the same amount of force. But the 5 minute time frame is going to be a lower time frame for us for entry models. So now you see this happen. What does that make you feel, right? You feel like this is going to be dumping like crazy because you're looking at this candle. Then the next candle prints. And you're like, okay, well, I guess this is going to accumulate and then it's going to die out. But then you have this. Goes up, taps into this, goes underneath the 50% mark again, and then it closes the candle. The candle starts going bullish. Candle closes above, causes a fair value gap here. Once it closes above, because this is a massive bearish engulfing candle, this is telling us we're bearish. The moment that this occurs, right, you have a structure here, followed by this candle that closes above the structure. This is a market structure shift. That means we're bullish now. We're going to continue. And then if you pull out to the higher time frame, this would have been a wick in the higher time frame. So this is why we look at the 5 minutes, because once we see that this market structure shift to the upside leaves behind this imbalance, this fair value gap, this is our entry point, right? This little area here, and we go for the 50% mark. This is why we go down to the 5 minutes. We don't go down to the 5 minutes to see the market structure, the market structures, or the way the market's moving, the price action. No, 5 minute time frame and the 15-minute time frame is for us to enter, for us to be like, oh, okay, well, I guess we're back to being bullish, and that's what it is. We're back to being bullish. This is a fair value gap. I'm going to enter on the 50% mark, which is this little line right here. It tapped into it perfectly. And even if you don't enter here, with this continuation here, you enter, because this has not been mitigated. And then if it goes back down into here, you can DCA into it. But according to this bearish engulfing candle, and according to this market structure shift of the 5 minute, we're bullish, and we're continuing bullish. So this is why we use the 5 minute for entries. We don't use the 5 minutes for price action. Does that help you out a little bit with the 5 minute time frame, Shabab? Do you understand a little bit better now that we use higher time frames to identify points of interest? 5 minute time frame is to get those sniper entries. This is where we're getting in, but with the mindset of this is our point of interest. We're playing out to see how this happens in this little area. And then, I mean, and like I said, right now the daily and the 4 hour and the 1 hour, this is like accumulating. It's not, we're not getting any like proper price action out of this to see like where we can enter. So we just have to let it play out. Let it play out. Keep an eye on these OTE levels, right? These optimal trade entries. We're going to set an alert on all of them. We're going to set an alert here. That one's at 26.4.13. We're going to set an alert at the 0.705. That one's at 2069.58. And then we're going to set an alert at the 0.79. That one's at 2075.30. And then when those alerts are triggered, we're going to go down into the 5 minute time frame. We're going to look at those entry models that I just posted into the chat. And our target is going to be this daily fair value gap, 50% mark. That's what we're going to be targeting to when it comes to gold. Now, does anybody have any questions for me in regards to gold? If not, give me 3 thumbs up, and we're going to move on to, let me see. We'll start on the Forex pairs, because we don't really have too many traders that do silver. We'll do Euro USD next. Let me get 3 thumbs up and then we'll move on.
how to delay so fast and organized, isn't it?
All right, looks like we are all comfortable with gold. We are now moving on to Euro USD. Guys, also post in the chat right now. We're gonna go over 3 different Forex pairs of your choosing after Euro USD. So you can start planning ahead. Post it in the chat what you want me to check out for you, okay? Right now we are looking at Euro USD. So remember on the last, right before we went into the end of the year, I didn't trade on the last 2 weeks. So this was the last live that I did, December 17th. I posted these 2 different areas here. These areas were for us to look for possible shorts. So we were waiting for the price action to react in these levels, and we were bearish on these. So it looks like we broke through this July 2023 weekly fair value gap, 50% mark, broke out of it, and then we went right back down. Now, the fact that these closed candles, right, the bodies of these candles closed over the actual fair value gap itself mitigates it. But since this is a weekly fair value gap, we have to look at it on the weekly, right? So we should be expecting like a wick. So weekly candles have to close with a weekly body over the fair value gap. This was mitigated perfectly, right? Which it looks beautiful. It's a wick. It's a beautiful wick. Tapped into the level on the weekly and then rejected off completely. You could have caught this on the daily, right? So once it came into this area, you would have been looking for shorts. That was our bias. We were looking for shorts this entire time. Now you have this fair value gap here that's also been tapped into. It's a daily fair value gap, so that's been mitigated. So that one's no good anymore. Excuse me. And we are now bearish, right? We're looking for bearish positions because on the daily, we created this market structure shift to the downside. And then also the weekly was rejected off this weekly fair value gap. We do have this daily fair value gap that's up here. And if it closes up above this, then we are extremely bullish after that. And then we're changing our bias to bullish. Oh my god, what the fuck was that? That scared me relaxing. Wow. Sounded like a zombie. Alright, so sorry, that threw me off completely. Wow. So this has been mitigated. This is still active for being a very premium point of interest. This has already been tapped into, which means somehow we are going to tap into this 4-hour fair value gap over here, and then there's going to be continuations to the upside, or this is going to be completely shattered through and then just tap into this weekly fair value gap that's here and then continuation to the upside. So we're bearish for now. We're looking for ways for this price action to go into this weekly fair value gap. Let's go down into the 4-hour to see what's up. Also, look, let's draw some fibs, right, on the weekly. Let's draw some fibs and let's see what the confluences are. This is our pullback right here, which is right over here. That's our pullback. And then this is our starting point, because this is the point we were at before the market structure shift. We're looking for shorts. Let's see what this looks like on the lower time frame. Right now we are on the daily. Let's look at the 4-hour. That's been mitigated. That's been mitigated. That's been mitigated. So right now price action is a little wonky, right? The market is a little wonky at the moment. There's no clear indication of what's gonna happen. You have a triple bottom here. 1, 2, 3 equal lows, right? You have the 4-hour fair value gap that's right over here. That's not been mitigated, so it hasn't been tapped into. Then you have the weekly 50% fair value gap that has not been tapped into. We're expecting the euro to go down because there's going to be there's going to be a lot of USD, a lot of dollars going into our market. in the next couple weeks because of the tax returns that are coming back. Keep that in mind, right? So the first quarter, we're expecting a lot of money to be flooding into our market, which means whatever's trading against it, it's going to go down. So that's why NASDAQ is going down too. So let me show you a little bit of DXY, right? This is the DXY. We're on the daily. DXY is your US dollar index. So according to my OTE, my fibs, we were supposed to get a reaction around here, right? On the daily. This is the all-time, this is the highest point, excuse me, not the all-time high, but this is the highest point that it was at. So I drew from here to here because this caused a market structure shift. So drew from here to here, that's my retracement. And then we're looking for entries for continuation. Tapped into the 0.79, and then this is when you started seeing NAS dumping. Now, according to this, if you're looking at this, right, and you have easy oscillator, you have a bullish divergence that's printed, so that's shifting the character, right? That's a shift in the market volume. We're looking into a lot more coming into the market for this, the US dollar, right? You also have a fair value gap that was left after tapping into the OTE, right? So tapped into that, it's going to be continuation to the upside. Now, it should come up to here, to this area here, and then come back down. Meaning that everything else that's trading against the dollar right now is going to do what? It's going to dump. So it's going to do the opposite. This is going to go up and down, right? It's going to go up and down. Which means if you trade against the dollar, it's going to go down, then up. So if you do NAS is going to go down, then up. Euro is going to go down, right? It's going to go down somehow, and then up. And then probably go down. But for now, we're just going to focus on that. We're going to focus on how it's going to go down, and then we're going to focus on how it's going to go back up. And then once we get over that, cross that bridge, then we'll focus to see what the hell is going to happen after that. But just so you can get a little bit of insight, right? So this is the DXY, this is the dollar, this is what's happening in the market. So let me get that out. So Euro USD, we're looking for somehow it's going to go down. But there's no clear price action right now. There's no clear entry point. We're going to wait for a good entry point for us. Let's look for the 1 hour. 1 hour, same thing. A lot of choppiness, accumulation, right? A lot of accumulation there. Nothing really like clear. No market structure shift. This is going up, but then it's coming right back down. So be patient. We've identified the points that we want to be looking at. If you haven't identified this point yet, excuse me, if you're new with us, the 4 hour fair value gap is at 1.08384. The weekly fair value gap 50% mark is going to be at 1.07932. And then the daily and 4 hour overlapping is at 1.07690. OTE levels are right over here. 1.10406, 1.10631, 1.10855. And yeah, this one overlaps. This is a daily and a 4 hour overlap actually. All right. Does everybody feel comfortable with Euro USD? What pairs do you guys want me to put on the charts now? Don't feel shy. Let's go through this together. And remember, this is very casual, right? So whatever questions you guys have, feel free to ask them. We're all here to help each other grow. There's no right or wrong answer. We're all here together as a community to help each other become better traders and profitable traders. Not just better, but profitable, which is the most important thing for us, right? Let me get some questions in the chat, and let me also get some recommendations for Forex pairs that you guys are looking at so we can go over together. Shabab, you're one of the newest guys here. Let me know what charts are you looking at so we can go through it together. And yes, I'm calling you out. And you too, Kiyo, I want you to pull up a Forex pair that you're looking at right now that you feel comfortable with, or even the one that you do not feel comfortable at all with. Let me know so we can go through that together as a team. Alright, you guys are shy. Let's go over GBP JPY. It's been a while since I touched this pair. We're looking at daily right now. Let me clean up these charts. Kind of scary. I haven't played with GBP JPY in a while. Extremely volatile pair. Great if you can tame it. Bad if you can't. This looks beautiful. Look at this. Equal lows. 1, 2, 3. Boom, boom, boom. Triple touch. Triple bottom. We are bullish on GBP JPY. We have a market structure shift to the upside. Let's check out this. Let's pull this OTE. We broke through this weekly high. This is the pullback because this is the lowest point. Let's look at this. This is on the daily. Oh yeah, we can definitely take advantage of this. Do we have any confluences here? No confluences on the 0.62, other than the fact that this is a support and resistance level right here. Right here is going to be your support. Boom, boom. Breaks through, becomes resistance. So if it plays out just like we want it to, this resistance level is going to, the support level, previous support level, is now a beautiful resistance level. So what that should be looking like is taps into this area here, possibly tapping into the 0.705, right? So let's highlight this. I'm gonna color in red. Let's activate the support and resistance levels. What does that tell us? EZAlgo, baby. Support and resistance levels. So we got one here, one here, one here. This support resistance level is a confluence with our 0.79. So we're going to be looking for this as our point of interest. We're also going to be looking at this area here as a point of interest because right now it's playing inside this level. So let's look for entries at the 0.62, and we're going to be looking at entries into 0.79. So that's 186.488, and this was at 184.735. We're looking at those for continuation to the downside. But we have these fair value gaps here. So if we're trading with the trend, we're going to be looking for bullish entries. So let's do that. Let's be on the safer side. We're going to be entering here at this fair value gap, and we're going to be entering here at this fair value gap. So we're going to label these. And let's see the OTE. We can draw the OTE from down here to here. It's not really a pullback yet because this candle hasn't closed. It still has 20 hours to close. We're going to label this blue Dabadita. And we're going to label this one blue as well. Daily fair value gap 50%. Daily fair value gap 50% mark. Let's draw out the fib, see what's up. Right? This might actually be the pullback if it overlaps. Oh shit. Math is math. So the 0.62 line overlaps almost exactly perfectly with the with the daily fair value gap 50% mark on the daily. Right? So this is actually off a little bit. So let me make it accurate. And then by making it accurate, this is extremely close. It's like pretty much overlapping. At that point with the spread, that's overlapping. So that's a perfect entry right there. But this might actually continue up. But as of now, if this counts as the pullback and then this prints as that, and then the following candle is a bearish candle, that's going to confirm like this daily fair value gap and then this daily fair value gap, excuse me, are going to be high quality entries for continuation to the upside. GBP JPY is so fucking bullish. Yeah, so those are the two entry points we're looking at. Let's look at it in the 4 hour. What's the 4 hour look like? Oh yeah, it's bullish as hell. Boom, market structure shift, continuation, candles, no mitigation whatsoever. It is crazy. Even the 0.705 overlaps with a fair value gap, and then your 0.79 overlaps with a fair value gap here too. This is on the 4 hour. On the 1 hour, what are we looking at? 1 hour fair value gap there, and then the 0.705 right above this fair value gap here. And this one is a 0.62. That was going to be the daily fair value gap. There's no fair value gap there on the 1 hour for that one. That's fine. But yep, so that's what we're looking at right now for GBP JPY. We're still bullish. We're looking for bullish momentum. We're looking for bullish positions. We identified two different entries, the 0.62 and the 0.705. This is on the daily. And then this point of entry here, 182.473, that's going to be this daily fair value gap. So we're going to see how that plays out in this fair value gap and then also in this fair value gap. I feel a lot more confident in rejection from this one versus this one, because in order for it to come here, it's got to break through here. But this could play out violently, touch it to here, hit this order block, come back down, continuation. So that's a possibility too, right? Taps into here, order block, here, and then takes all the liquidity. All that liquidity and continuation to the upside. So we could be seeing that. But yeah, just keep an eye on those, set your alerts. Definitely gonna mark that out. And then I had Euro USD that I marked out as well. I'm gonna keep an eye on those. Does anybody have any Forex pair that they want me to go over? Don't be shy, guys. Come on. This is for us to go over and to make sure that you guys feel confident enough and that we can identify points of interest and then trade those points of interest, right? We want you to trade the points of interest because those are going to be the highest quality trades that you're going to get. It's not going to be like YOLOing into a trade and trying to like plan out, oh, okay, well, yeah, hopefully it goes here or hopefully it goes there. No, this is like, there's a lot of volume behind it. There's a lot of confluences behind it. It should help you feel confident getting into those trades. Let me get one more Forex pair. If not, then that's it for me, guys. And then I'll be signing off. But let me get one more Forex pair for you guys, so you guys feel confident in this coming week when it comes to Forex. Alrighty, guys, looks like we feel very confident in the pairs that we went over tonight. We went over a couple indices. We went over NASDAQ, we went over US 30, we went over gold, and then we went over a couple different Forex pairs. Now, without further ado, Thank you very much, everyone. Thank you for joining me on tonight's live. We will be here same time, same place every Sunday night, 7 p.m. Eastern Standard Time. We are talking about the New York session time. So stick around for that next week. And for those of you that weren't able to join us tonight, no worries. This is going to be going live on YouTube right after this live session. Thank you all for joining us. Thank you for being a part of EZAlgo Community, and have an amazing trading and profitable trading week. Take care, guys, and good night.